Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from SmartCon 2023 by Chainlink in Barcelona. Joining me for this segment, we have Andrés Fondevila. He is the Head of Digital Assets at BBVA Asset Management and Global Wealth. He joins me to discuss the drivers from an institutional point of view that will drive massive adoption of blockchain technology. It is great to have you with us, Andrés. Welcome to Trade Talks.
Thank you very much, Jill, for inviting me to join this Trade Talk with you.
You got it. How does a traditional financial institution like BBVA assess the European MiCA regulation?
Well, I think that it's important to understand or highlight that as a high regulated company, and it doesn't matter if we talk from the banks or an asset management perspective, we have our fiduciary duty with our clients and the compliance with each local regulations in the markets where we operate or the countries where we operate in our top of mind. In fact, we have a well-prepared number of compliance and legal teams that in order to ensure that. With regards to MiCA in particular, that is the new markets in crypto assets regulation in Europe, I think that is one of the biggest milestones achieved in the last years, because this regulation, after a long period of 3 years of negotiations between the European Union members, will allow us as traditional players, well, MiCA will establish the boundaries of the field game where traditional financial players feel comfortable operating in instead of the Wild West. I think that MiCA should not be a standalone regulation and should be updated in the future, but I think that it's a good kickstart. And it's also a good kickstart for the Web3 native companies, because we can find collaborations between each other, between financial system and the crypto native companies.
So from an institutional point of view, why do you believe, or what do you believe will be the drivers for mass adoption of blockchain technology?
Well, I think that there are 3 macro indicators that invite us to think that tokenization and mass adoption will occur. The first one is the social driver, which includes all the behavior of the population that could be or are our current clients or could be our prospective clients in the future. In this point, we include 2 mainly points. The first one is that we live in a hyper-connected population, and the behavior between the population is interacting more and more digital with the banks and with the asset managers. And the second point is that the wealth is concentrated in the baby boomer generation, which means that the next generation, the X generation or millennial generation, that has completely different behaviors in interaction with the banks and with asset managers, will heritage trillions of dollars in the near future, in the midterm. So that's the social driver. About the regulatory driver or government driver, I think that we can see clearly that Europe make effort to make things happen in the digital assets ecosystem. I think that MiCA, the DLT pilot regime, and the local sandboxes allow us, as financial traditional institutions, to test the benefits of blockchain technology, the tokenization of asset classes, in order to be there. And finally, the CBDCs, the evolution of CBDCs will be a key point. And the final driver, I think that is related intrinsic technology driver. The reality is that the industry related to crypto, to blockchain, or digital assets in a whole concept has been surrounded by noise and controversy during the last years. But however, DeFi in a whole concept was holding up properly if we look at the indicators such as the trading volume. And I think that technology will find a way naturally to solve problems like interoperability and scalability. I think that points are very important. And the last point in the technological driver is that the energy consumption is not a problem right now, because we changed the mechanism of consensus from proof of work to proof of stake.
What are the benefits and challenges of tokenization, and where do you see the greatest potential for it?
Well, I think that everyone in the blockchain community will agree with the idea that blockchain technology in the traditional financial systems will optimize processes, will improves the liquidity by creating secondary markets and allowing the atomic settlement in the operations, will improve the transparency and the traceability of the system, and finally will break up barriers of entry in markets that are usually restricted to some type of clients. So that's good news, but the challenges is really to build those infrastructures that will allow us, traditional player, to introduce tokens, to introduce tokenized products in the market in order to distribute them. And I think that it's important to understand that the path from today to a fully on-chain optimized operating model will last years, and we have to maintain both platforms in order to converge in the future.
Yep, because we still have the existing business that needs to run.
We have existing off-chain businesses. So, and the biggest opportunity, if taking into account the benefits of blockchain that I have mentioned, I think that it's important to highlight that the improving liquidity, enhanced collateral, and the entry in markets that was restricted in the past, I think that the alternative investments, such as private equity funds or private equity, private debt, or real estate, will have a success path in the future in terms of blockchain and tokenization.
Okay, Andres, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Barcelona. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.